Hello traders, I'm well aware that many of you have embraced the principles of smart money concepts or have viewed videos on the subject. Now I'm here to shed some light on the truths about these concepts that may have been overlooked. A lot of videos on YouTube often flaunt the profits they make from smart money concepts. Unfortunately, the demonstrations are often cherry-picked or presented in hindsight. They rarely address the shortcomings or exceptions to these concepts, thus giving you an incomplete perspective. Now don't misunderstand me, smart money concepts are indeed powerful strategies. However, like any technical analysis tool, they do have limitations too. So in this video series, I'm going to show you some other techniques to combine with smart money concepts in order to increase the chances of a successful trade. So without further ado, let's get into part one, which is going to be on market structure. Now we've all been told that an uptrend consists of higher highs and higher lows. Something like this. And a downtrend consists of lower highs and lower lows. Now in the market, you will never see market structure as clean as this. This will never happen in real life. Sometimes you might see price making a new lower low, tricking you that it's going to be a downtrend, and then it reverses and makes a new higher high. Or sometimes you could get consolidation and a fake out before the continuation of a trend. So something like this. So what I'm trying to show you is that market structure is not perfect sometimes. It can be a little bit confusing. So let's go over a few examples of when market structure can be a little bit confusing. This is a 1 hour chart of the S&P 500. This is not cherry picked, it's the latest data from last week. I can already see two examples here where you may have gotten tricked by the market structure. So the first one would have been here. This was the last high low that was broken. So if you were trading this in real time, this would have been a change of character, showing you that, okay, now on the 1 hour chart, this is bearish now. It's broken structure here. Now, if you entered a short trade over here, hoping that the market will go down, you would have been in a losing trade. Because as you can see, the market went higher and made a new high over here. Another example I can see is over here. It's broken this low here. So you would have thought, okay, that this is another change of character, because this was the high low, which led to a break of structure here, giving you a higher high. But then it's broken this higher low, tricking you that now it's in a downtrend. However, it then reversed and created a higher high. So I just want to show you with those examples that market structure is not perfect. So how do we eliminate some of the false break of market structures so that you don't get caught on the wrong side of the trade? So the most important part to remember when you're doing your market structure analysis is that it only applies to the time frame you're looking at. So for example, we see here that the 1 hour trend is going down. That is the short-term trend. So on the 1 hour, it may have changed to a downtrend, but this is only on the 1 hour chart. If we zoom out on the 4 hour chart, you can see that we're still actually in an uptrend. So it's important to analyze market structure on different time frames. So you may be asking, well, which time frame should I use? Well, that depends on the types of trades you're doing. Are you scalping the market, or are you in a swing trade. Because if you're in a swing trade, well, you should be doing your analysis on the higher time frames, right? So if you know that the 4-hour chart is in an uptrend, you know that there might be some noise on the lower time frames, but we know that on the higher time frame, the directional bias is still to the upside. But if you're scalping the market, you can trade on the lower time frames. So you can absolutely trade the change of character or break of structure on the lower time frame, such as the 15-minute or the 1-hour chart. Just remember, don't get too greedy with those scalping trades, because you know that the higher time frame doesn't align with the shorter time frame trend. Now, a lot of people who know about smart money concepts will tell you that there's liquidity below a level, or there's imbalance or fair value gaps. The reality when it comes to trading in real time is that it can be very confusing with all these different concepts. So I'm going to show you a couple of techniques I use to combine with market structure to hopefully filter out that noise for you. The first technique I use in conjunction with market structure is Monday's trading range. And if you don't know what Monday's trading range is, go watch my video. I did a video on that. I'll post the link in the description below. Essentially, that is just Monday's high to Monday's low. So let's see how Monday's trading range could have helped us eliminate some noise here and actually show us the true directional bias. Okay, so here we are with Monday's range being marked out. As you can see, price started making lower highs and lower lows on the 1-hour chart, showing you that it is in a downtrend. However, because we understand Monday's trading range, when we saw price come back into Monday's trading range, we know that, okay, we should be careful now, because if this was truly bearish, why is it coming back into Monday's trading range again? And as you can see, subsequently, it's gone to the other side of Monday's trading range. So if you were in a short position, this candle here would have given you a major warning sign that, hold on, we shouldn't be very bearish here until price starts breaking below Monday's low again. Okay, so that was the first example. Let's take a look at the previous week, right? Okay, so here we have the previous Monday marked out as well. As I said earlier, the price action broke this low here. So you could have thought that the market structure changed to a downtrend. But because we understand Monday's trading range, we know that as soon as this candle, this big green candle closing inside Monday's trading range again, that we should be careful about any short positions, because if it was truly bearish, why is it coming back into Monday's trading range, right? Okay, so hopefully you can use Monday's trading range in combination with market structure to help you filter out some noise. Now let's take a look at the other technique. Now the other technique I like to combine with market structure is pivot points. And I made a video on pivot points as well, which I'm going to link in the description below. So if you don't know anything about pivot points, go watch that video now. So as you can see on the chart, we have the price action and the Camarilla pivot points set on the weekly time frame. Now, as you can see, the first example here, price action came into the weekly support zone for the pivots. The fact that the price got rejected off the weekly support zone for the pivots, plus the Monday's trading range, shows us that we shouldn't be too bearish on the price action. Not until price action actually demonstrates that it's getting below Monday's low again or breaking the weekly support zone. Now let's take a look at the second example. So in this example, price action did break the weekly support zone, which I'll mark out here. However, like I said in my pivot points video, pivot points are not 100% as well. What I like to do is combine multiple things together. So when you can see that price broke back into Monday's range again, and then it's reclaimed the weekly support zone of the pivots that should be a major warning sign for you that you shouldn't be too bearish on the price action. Okay, to sum up this video, make sure when you're analyzing market structure, look at the different time frames and just be aware of which time frame you're looking at and what the market structure is doing on that specific time frame. Second, use other indicators or other technical analysis tools in conjunction with smart money concepts in order to improve your success rate. So I hope this video has given you a better understanding of market structure and show you that it's not 100% perfect all the time, and that you should be careful when you're trading smart money concepts because sometimes you can be in a losing trade as well. Now, if you enjoyed this video, hit the like button and subscribe to the channel, and stay tuned for part 2 of this series, which is going to be on supply and demand. See you guys.